What's a trader like you doing in a place like this? My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Yeah, we're an ECN that offers you not just Forex, but energies and metals and indices and binary options for scalping and for hedging long-term cash positions. How nice is that, huh? Oh, Igor and a few other people have noticed this little toy here. If you're a client of TradersWay.com, I can get you this little toy if you want. I don't know. If you want to see the order flow. It might be. Yeah. Oh, well, we'll talk about that later. Thank you to FX Street for hosting this event. I have a simple goal doing these events. I'd like to contribute to at least 1,000 pips of your profit this year. How are we doing towards that goal? FX Street forwarded me an email yesterday that someone emailed them to thank them for these webinars and that they're up at 400 pips because of them. And that was really cool, and FX Street was impressed. And it was nice for me because I put in a lot of time and effort into these events, and, you know, there's not much in it for me except the glory of your success. And that's cool. I'm up for that. So how are we doing on that process, guys? How many pips are in the bag? Yeah. Hey, anytime, Mark. Anybody else have a success story? So like I said, someone emailed FX Street, say they got 400. How are you doing? Cool. Sebastian says over 1,000 already. Congratulations, Sebastian. That's really cool. Pele says about 500 pips. Cool. Marina? Yeah, well, okay, Marina, 4,000 since August. That's cool, but that's not all because of me. So, yeah. Oh, yeah. Marina's a great trader. Too bad they convert into Rand. Oh, well. So anyways, good to see you. If I count an oak on the pairs, yeah, I got 10,000. Yeah, very good. All right, so what would you like to talk about today? Technicals, fundamentals, and all that kind of stuff? Change of trend? Trend? Yeah. The view of the indices? Yeah, I've been talking a lot about the stock indices lately, so we can do that. Reverse divergence, I think you're overcomplicating things. Sounds like you talked to somebody that was trying to sell you their book. How about inverse reverse divergence? Have you thought about that one? Inverse reverse divergence. Well, you don't know what that is? Well, you better buy my next book. Let's talk about the basics of currency trading for a second. How about that? What you need is supply and demand. And I guess as far as price action is concerned in relation to supply and demand, you should be able to gauge market conditions such as, you know, is the market trending? And if so, you might use like Fibonacci as a tool for trend trading. But if the market is caught between support and resistance, otherwise saying range bound, then you would use a tool like an oscillator to sell at the top of the range, which would be resistance, and then buy it back again at the bottom. I think that, and then what should I add to that? If I were to add anything, maybe, and it's not even really required, I'd say maybe like get to know one or two or three basic reversal patterns, like a double top. I mean, not complicated stuff, but that's probably not even required, really. So yeah, that would be about it. So, your inverse reverse divergence, don't worry about it, huh? Okay. Remember, the smartest people in the room can make complicated things simple. And the copycats that don't really get it, they take simple things and they make it complicated. That's clearly when they don't know what's going on. So always bear that in mind. Inverse, reverse divergence, never heard of it. Don't need it. What are you talking about, huh? So that's that. So anyways, here's this cool tool for those that open up an account at tradersway.com. This will hook you into the interbanking system, and you can see the order flow. So over here on the right-hand side, these are orders of people buying. You can see they're like a tenth of a pip. These are where the orders are. So 20 orders, 25, 90 orders. Look at that, 90 standard lots right there. Woo, just slightly above price, 90. Oh, there's some at 66 up there. Oh, 70, 50, 20, 40. How about on this side? Who's selling? 9 lots, 8 lots, 5 lots, 8 lots, 13 lots, 8 lots. Look at this, 45, 50, 90, 70, 50, 70, 90, 90, 40, 90, 90, 70, 95, 95. Holy smokes, what? Hey, that's neat, huh? Not many people are selling. But, so anyways, that's available to clients. You open up an account, you let Uncle Wayne know, and I'll take care of you, huh? Igor says, what about the theory with base, drop, rally, and so on? Base, drop. I'm not sure. I don't think we have enough time to talk about that, but you are not alone. All right, so that's cool. So change of trend kind of stuff, huh? How about an example? Do you have an example of something that you're worried about, and I can take you through? Yeah, DV says talks about Sam stuff. Yep. DV says is level 2 just for that broker. Well, we offer it, so if you want it, and I believe it'd be intermarket stuff since Traders Way is an ECN. So there you go. That would be our liquidity providers orders, because those are standard lots, right? 90, 50, 90, 70. These are all orders coming in second by second. So that'd be 95. So that'd be intermarket. So how do you get it? Open an account. Send me an email. I just said it. Open an account. Send me an email. I'll take care of you. But yeah, Sam's stuff is good. He's a great speaker. Cool. Cool. All right. Well, there you go. You got it, Igor. All right. So an example, do you guys have change of trend stuff? Do you have? So is Wayne's with NFB. Thank you. Thank you. I appreciate that. You want Aussie USD, Igor? Okay. Everybody cool with that one? Okay. First of all, what is the trend? Yeah, I've been selling the Aussie dollar for, I think, about 2.5 years, if I remember correctly. Mark says he used my NFP strategy to make some cash. Cool, right on. Send FX Street an email. Let them know. I want to document your success. Seriously, guys, I want to document your success. Let's find the 5% that don't lose everything, because that's really hope. Because the first thing I find that when people enter the Forex market, they start trying to trade and they realize it's difficult and they're like, nobody's making money at this. Well, let's change that perception. Say, hard work, strong work ethics, and an impressive focus can pay off. It's worth the effort, right? Thank you, moderator. Really appreciate that. Stick to ability. So let's document your success, guys. Really, honestly, my goal for doing these Friday events is for you to succeed, and I'd like to document your success. Otherwise, what's the point? I'll go golfing on Friday morning, right? That's all. Okay, so anyways, why sell the Aussie dollar? And, well, I've been selling the Aussie dollar, like I said, for quite some time. And it just has to do with the change in global macroeconomics, but also one day the Reserve Bank of Australia, under the leadership of Governor Stevens, one day said, hey, our Aussie dollar is overvalued, so they drove it down. And we consolidated for a long time, up and down. But these are daily, right? So, time goes by again. And then right in here, Governor Stevens says, our currency is worth 97, but it should be worth 85. What? Yeah, so the thing dropped by over 1,000 pips. Easy, free money, guys. And so my trading performance for that year, when you looked at compared to previous years, trading the Aussie dollar was a relatively small percentage overall, right, as far as the individual currency pairs. Aussie dollar was, it was something I traded, but it wasn't by far the most common thing I traded. All of a sudden that year, it probably was half the trades. Anything with an Aussie on it, I sold. Well, depending on the situation, but I sold Aussie versus everything. So then we finally get to 85. What does Governor Stevens say? He says, no, it's worth 75. And it dropped another 1,000 pips. Huh. And then once we get to 75, he says, you know what? It's still overvalued based on historic levels. Whoa! And we're kind of eyeballing the 70 area, and we don't have a new catalyst. So we can't talk about a change in trend until we understand what the trend is. Understand that logic? Okay? So that's what the trend is. And this has to do with global macroeconomics. In particular, in the beginning, Asia slowing down. Europe slowing down. And then more recently, Asia slowing down. But nothing is out of control. We hit this, we dip into the 60s there, and then he immediately pulls back. Okay, cool. So now what? Well, we could be closer to fair market value, but we kind of need to know what the Reserve Bank of Australia wants. So how could you gather that intelligence? Yeah, but you know what, Mark? Mark says it sucks being in Australia now because everything's expensive. But you know what? Here's the thing. 6 years ago, you were probably complaining that the Aussie dollar was so strong. It sucks. The Aussie dollar is so strong. And now it's like, oh, it sucks because the Aussie dollar is so weak. Yeah. All right, so a couple of things. Yes, central bank meeting minutes, which I begged you guys to read. Begged you. And then the monetary statement. Yeah. Very good, guys. So I'll take Adam and Raymond. All right. Good job, guys. Absolutely. So there are ways that you can tell. They give you a statement, and you should actually read the statement. You know, for example, like I think a couple of 3 months ago, I was reading the meeting statement and chatting about it with a reporter at Bloomberg about specific sentences and specific paragraphs. People do this. They digest it, right? So, like, if you just read it like, I don't need to read that stuff, well, you're fooling yourself. I don't know how long you want to believe that, but you should know. Okay? So, you should read the statement. It might take you 20 minutes of your time, your precious time. Right? Read that. And then there's the meeting minutes. And this is where the team of people that manage the monetary policy and valuation of currency discuss the economic activities and potential changes in their policy toward the economic conditions at the time. They actually discuss it, and you can read the meeting minutes of who, well, they don't really give names, but, you know, what was said and what was discussed and what was debated and all that kind of stuff. Very, very interesting stuff. So you can learn, for example, do they want to talk down the Aussie dollar even more? Because now that we're at 70, what you need to be deciding, well, not all central banks do that, Igor. But they give the names of the participants, but very often when you're reading a meeting minute, they'll say, you know, some members of the committee said this, while other members of the committee had concerns about that. Okay? All right, so what the question you should be asking yourself now is, over the next 6 months, let's say, will the Aussie dollar be at, how about this, 80 or 60? If you were to meet a client, what would you say? Come on, guys, there's 81 people in the room. Let's get more than 7 people involved, huh? Well, we're at 70 now, Marky. Igor's 72. All right, 72. We'll say 60. Okay. So a lot of people say 60. Now, what could you do to, if you were creating a PowerPoint presentation now and you were going to pitch to me, you're a great Forex trader, you want some of my money to invest, great. And you say your outlook for the Aussie dollar over the next 6 months is down to 60 from 70. Great. Why? Convince me. What's your alpha? And your alpha is your ability to outsmart the market without taking on additional risk. So Sebastian says, for example, Australia might cut interest rates. Okay, where did you get that? Okay, so you're guessing. Unless they tell you, it's not going to happen. What is the key tenet of modern central banking policy? And that's transparency. No, no. Well, Mark said no jobs. Well, I don't think the central bank would have said no jobs, right, Andy? Don't get me riled up, Andy. Yeah, don't get me riled up. I'm going to throw a chair through my office window or something. You say, but unemployment, whatever. No, 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 no. I'm just asking where. See, like, how about this? I'm only interested in fact, right? So I know what you're saying, and I know I'm not saying your opinion's wrong. I just want to know the facts. So if Governor Stevens didn't say it, it ain't going to happen. You might anticipate that, but you don't know. And if you want to invest my money, you better tell me the facts. Hey, the central bank, right, the Reserve Bank of Australia wants to cut interest rates because they said so in their meeting minutes. It's one of the key things that they're discussing, the causes and effects of that. But based on this other fact, the RBA is definitely leaning toward another cut, but it's not going to be for a while. Right. So Igor's saying the fact is at the press conference they said no more cuts. Right? Till 20. Well, they're buying themselves time. Right. So that is an important fact, isn't it? So, for example, if if in um, if in the next 6 months Australia cut interest rates and the United States raised interest rates, would the Aussie dollar fall quickly or slowly? No, I don't care about target because again, a target's a guess. We're only talking direction and velocity, right? So the velocity in the change of valuation would be quick or higher, let's say, because we have a divergence in central banking policy, right? One is contractionary, one is expansionary. You take the strong versus the weak, and you got the perfect storm. Okay? Now, if Australia keeps interest rates the same, but the United States raises interest rates, it will also fall, but maybe not as quick because there's less of a divergence in policy. One is neutral, one is contractionary, right? But neutral is not expansionary, is it? Neutral is just neutral. So there's less of a dichotomy, a juxtaposition, if you will. So if we're talking about a change of trend, I think it's interesting to think about this because what many pure technicians do, I mean, there's strengths and weaknesses to everything, right? And the weakness to pure technical analysis is very often you're not thinking about what's going to happen next week, next month. So by the time, sometimes you'll be in early, sometimes you'll be in late, depending on the scenario. So I think putting things into context are helpful because in all these down moves, okay, in all these down moves where the market consolidated or even moved up, I didn't buy. Right? What about the double bottom higher high? That's a reversal pattern. I didn't buy it. Why not? Fundamentals. So it was like a reversal pattern put into the context of nothing should change. So Igor brings up an interesting conundrum, right? If Australia does not cut interest rates, so I was following Igor's chat here. Igor believes that the RBA has told him that they will not raise interest rates this year, right? 2015, no chance. And then Igor's saying now that on September 17th, there's a really good chance that the Fed doesn't raise interest rates. In that scenario, we could have a rally on the Aussie dollar because the U.S. dollar could be overbought as fund managers and portfolio managers have, let's say, front run the Fed mistakenly. Yeah, I can't get it. Okay, so if that's your belief, then we need to take this from a day chart to a smaller time frame. So the question now is, technically speaking, how do you identify a change of trend, right? Well, before we answer that, we need to identify what a trend is. A trend is a series, in this case a downtrend, of a low, lower high, lower low, lower high, lower low, okay? And then what? All of a sudden, woo, big pullback. I'll make it like this. So what's going on with this trend? It hasn't reversed. There's no change in trend here. But there's something going on. What is it? Slowing down. And this is important to observe because one common mistake that amateur traders make is that they do not adjust their strategy to changing market conditions, right? They sold up here, they sold here, they sold here, they sold here, and there's no difference. Well, there is a difference, right? You can see how steep some of these moves are and then how high the retracements were. Notice how this one kicked off the roll reversal. What used to be support is now resistance. Great. A little less steep of a drop. And then too big of a pullback. Remember, if you were trending, if you were using a trend tool, like Fibonacci is very common, that's greater than a 786. In fact, anything above a 618 is a huge red flag for me. Okay? So that would, when I'm up here, I would already be trading this like a range trade. And then, and because of that, I wouldn't expect a lower low. And then suddenly, let's say we get something like this. Okay? To any degree. Okay. And that's the change of trend here. But why do I have little white spots? This is like a lottery ticket. You just have to scratch it and you get the answer. Okay, and that is a change of trend where you fail to make a lower low, and many times you'll get a move like this, which is even easier to spot. That is like free money when it's like this, and it happens a lot actually. Okay. Come on. All right, can you see that pattern where suddenly this high is higher than that high? And you could use a fib to anticipate where the new higher low is going to be, but what I do is I usually eyeball somewhere in there. Okay? And off it goes. So you get the double bottom, the higher high, the higher low, and then a higher high, and then a higher low, and then a higher high. And that's the change of trend. Pele is asking essentially what time frame, and all time frames. 1 minute, 5 minute, 15 minute, 1 hour, 4 hour daily. And he's right. I don't want to talk about that. That's my crystal ball. All right. Most of the time, this is a slow process. Imagine this on an hourly chart. How many hours do you think this would take? Yeah, or it could take 3 days. So, in my book, I describe how the market reverses. Does anyone know what metaphor I use to describe how the Forex market reverses? The Forex market reverses like an old man easing into a hot bath. Can you picture that? The Forex market reverses like an old man easing into a hot bath. Here, Eric, that's what he thinks about. So it's a slow process, and that helps me because the Forex market very rarely, if ever, reverses like a V shape. Okay, so what I look for in that change of trend is a reversal pattern similar to a double bottom because that confirms the support. And then the higher high itself is the change in trend. Now I'm going to do it this other way. Okay. That's the change in trend. So to put it together, if you use fundamentals as part of your trading strategy, very often you can anticipate a change in trend. You don't know if it's going to be today or tomorrow or next week, but you can prepare. Then you can ask yourself, where will the change of trend occur? So I don't care what currency pair, right, that you want to talk about, right? This could be anything. But you tell me, if I said, hey, this thing fundamentally, could reverse, where on your chart do you think it could likely reverse? Even before that, Lawrence, I know it's a tough question to answer. It's a tough question to ask. Sure, Andy, that's cool. Because if it's a reversion to the mean in a channel, it's likely to be a reversion to mean in a moving average. And because it's a mean reversion, it's also a Fibonacci retracement. You throw down a psychological level, and you're golden. All right, so Disco says support and resistance, and that's really what I'm going for. It's going to occur at support and resistance that a blind man can see. You know what I mean? The obvious areas, like on the Aussie dollar, how about 70000000000000000? You could guess. I mean, come on. If you were thinking that maybe the Aussie dollar was going to reverse course, come on, dude. 70 is pretty obvious, isn't it? Does anyone agree with that or not? If you disagree, I'd like to know too. Very good. I was trying to explain to someone just the other day that I'm a very reasonable person as long as you agree with me. Okay, but in that case, do you just buy at 70 because you think it's going to reverse? How do you enter? Because we know most people lose money out of one of two reasons. Their tactical entries suck because they have no strategy, right? Or their strategies are flawed because they don't even have a strategy. So the fundamentals would be your strategy, right? You're like, well, I see Aussie dollar falling. It's been falling for 3 years, but I want to buy it. Now that, and it kind of sounds funny though, doesn't it? I just have to say that for those that want to buy it, I'm not saying you can't, but it's been falling for 3 years and you want to buy it. It just sounds wrong, right? Doesn't it? But all right, fine. But it just shows that it's a risk. When you're trying to change a trend, by definition, you're taking on additional risk. And then even because of that, the reward is to be less likely. Okay? But anyways, you want to reverse this entire market. Right? No, Igor, you're right. You can be short-term long and long-term short. That's fine. As long as you understand what you're doing, you can do whatever you want. But my point is, just because you think it's going to reverse doesn't mean it's going to reverse. That's your strategy to say, I think the Aussie dollar could reverse. So therefore, you let it fall to the area where you think it might reverse, in this case, a giant psychological level, or an unbelievable pivot cluster, something obvious. Then the second thing you need to do is observe the price behavior in here. Uh-oh. Igor's mind just went... I hope you guys like trading. How many hours a day do you spend in front of the charts, man? So I hope you enjoy what we do. So in this area, it would be important to observe this change in trend so that you know that you could possibly be right. And in that case, you would be buying in here. Okay? This is the buy in your giant change of trend. Okay, guys? That you, first of all, fundamentally, you believe it's going to happen. That's the first one, strategy. Two, you identify an obvious level of support or resistance that even a blind man can see. Three, you get the reversal pattern, such as a double bottom. And I would count this as a double bottom. Because therefore, it now confirms your support level. Now, it doesn't confirm your fundamentals, because technically the market's still bearish, especially if you change the time frame, it's probably still bearish. And it's still bearish, meaning, you haven't made a high higher than the previous high that is not even on the screen yet. So you're only kind of short-term supportive, but you don't know if it's for long-term fundamentals, right? Policy changes at the central bank, for example. But you do have a strategy, like a theory. You did identify support. Support was respected by the marketplace, producing a double bottom, followed by a higher high, which does not belong in a downtrend. You understand that? A downtrend is a lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. WTF? That doesn't belong in a downtrend. So what do you do after the higher high, after the double bottom, in a downtrend? What's the key word? Say the word, say the word, say the word, say the word. Look at this. We got some highly trained people here. Is anybody confused why everyone is saying hammock? What the hell does hammock mean? Weird, isn't it? It's because I've been doing events at FX Street for 10 years. Let me say that again. I've been doing webinars, live trading, and training events at FX Street for, let me say it without spitting, 10 years. 10 years. What? A decade. Right? I was like 12, and now I'm like almost 23. Holy smokes. Almost 23. Yeah. Thank you. So here's where it comes from. It comes from an event I did, I don't know, a year ago or something, where I said the key to learning how to trade Forex successfully is to master one thing at a time. Forget about trying to figure out 9 different trading strategies, right? Or, do you own that book where some idiot says he went to Japan and translated out of Japanese the 927 different candlestick patterns, translated them to English and brought them to the Western world, and now he wants to sell you the book for like $250 for sir. Yeah. All right. So here's my advice. You don't need to know 927 because that's just stupid. What did we talk about before? Dumb people take simple things and make them complicated. Smart people make complicated things and break them down into simple, right? I don't need to say who, but let's just say I used to speak at all the conferences around the world, and he was never there because they didn't like him. They thought he was a scumbag. So, well, there you go. But anyways, I only met him once, so I can't really say. But he said we can make a lot of money together, and I said, well, I don't need any more money. And then he just didn't know what to say after that. But so anyways, what I'm trying to say is let's boil it down to what you need. Let's pick one pattern, and I suggested let's do a very, 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 very basic pattern. And then I want you to master the one pattern. I want you to do this one pattern over and over and over again, maybe 100 times, until you can do it in your sleep. And the metaphor I gave comes from the military. I said, imagine you're in the Navy and you're on a battleship. And the commander of your cruise he's one of these tough guys that will just drill you and drill you and drill you and drill you. So all day, every few hours, the sirens go off. And you have to run to your battle stations. Man your station. So, you got to stop whatever you're doing. Maybe you're in the mess hall eating. No, they don't have mess halls in the ship, right? In the galley? You're in the galley and you're eating, and all of a sudden you got to stop what you're doing and you got to run. So you're running down the hall and climb up the ladder and run down the next hall. And, every so often in the bulkhead you got to duck your head under the steel door, come up the other side, right? In case water comes in, they can make the ship watertight again. Anyway, so you do that 5, 6, 7, 8 times a day. And all of a sudden your commander, he's a tough guy, right? He starts sounding the alarm in the middle of the night. And this idea of hammock is that you're sleeping in a hammock. I don't know if they still do this. It shows you. I was in the Navy one day, so definitely didn't make it to an aircraft carrier or a battleship. But anyways, I imagine you still sleep in hammocks. I'm sorry if I'm wrong. But anyways, you're in your hammock, right? And all of a sudden it's 3:30 in the morning. And you're like, oh, and you got to jump out of your hammock, throw your boots on, run down the hall, duck your head under the bulkhead, climb up the ladder, get to your station, load your weapon or whatever it is. And you just do this over and over and over again, maybe hundreds of times. Until one day, you're fast asleep in your hammock. The alarm goes off. You jump out of your hammock, throw the boots on, run down the hall, duck your head under the bulkhead, climb up the ladder, man your station, and you're still asleep. That's what I'm trying to do for you. I want to train you so you're that good, where you can do this in your sleep. And in fact, I dream of this sometimes. And you think I'm joking, but I'm actually not. So, the pattern we had talked about was a double bottom with a higher high. What you do after that is you use your Fibonacci retracement, and somewhere between the 382 and 618 Fibonacci retracements you buy. That's what we talked about maybe a year ago. And that's where the word hammock comes from, because it's a trigger, or actually it's called an anchor. And I bet you when you see a pattern like that, you actually hear my voice. And you actually think hammock. Because this actually gets filed into multiple parts of your brain and eventually your psyche. It's not just a pattern you've memorized. It's more than that. There's imagery. You can actually see yourself running down the hallway. You can what would it feel like if you hit your head because you didn't duck under the the steel door of the bulkhead? You didn't duck. What would that feel like? Have you ever hit your head against steel? You could probably imagine it. You can almost feel it as I talk about it. And you might be able to remember that and associate that with that reversal pattern. Okay? There's a lot of different ways that you can train your brain to remember these things. And I try to approach them, and it's neuro-linguistic programming if you want to look that up. But this is the beginning of your success, guys. This is a very simple pattern. But put it all together, and it's quite powerful. Now remember, it started with strategy first. Because you read the meeting minutes, because you read the policy statement, because you review any sort of public discussions and stuff, because you read the data provided by the central bank on the website, you're very well in tuned to what they are likely to do in the near future. That is key. If you don't know that, you can't plan anything in advance. So you have a strategy, and your strategy is you believe the RBA is done cutting interest rates for the period of time in which your trading outlook is based on, okay? And it could be short-term long to long-term short. That's fine. Then the second thing is, where would the change of trend occur? It's going to have to occur where there's a large population of traders that would like to trade in the opposite direction of the prevailing trend. Do you understand how ridiculous that sounds? The prevailing trend is down, 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 but you want to reverse it. So you need to have a place where you think there's a lot of orders sitting to go in the exact opposite direction. And everyone's been, remember, in a trend, everybody's making money except all the losers that are trading against the trend. So you got to really say to yourself, well, why is it going to reverse here? Well, first of all, you need the people that control the valuation of the currency to tell you that that's what they're thinking of doing. They're going to reverse their strategy, so therefore you might need to reverse your strategy. And you want to do it before everyone else, which is also sort of ridiculous, but all right, that's your alpha. You're going to outsmart everybody, fine. But I'm saying you better have the RBA. If we're talking about the Aussie dollar, you better have the RBA ready to act on your behalf, right? If you're going to change things, but fine. So you got your strategy there, but now you need to know where all the orders are. So do you think you're going to have a lot of buy orders at some weird, lame, mediocre support level? Is there a lot of buy orders at 170.50? No, you need something obvious, right? This is what I'm saying. That's why I said you need support that a blind man can see. If you don't have unbelievably obvious support, then you don't have an unbelievable amount of buy orders sitting there. You see what I mean? So that's another key factor before you get anywhere. Then third, you should observe at that spot where you believe all the orders are, you should observe a reversal pattern, because it confirms that there is a supportive floor. Okay. Lastly, you should confirm that the orders were entered or triggered, and that would be the higher high after the double bottom, and you say, aha, confirmed, game on. Then you pull out a Fibonacci retracement, and somewhere between the 382 and 618 Fibonacci retracement, you buy, and your stop just goes below the support zone. And hopefully, if things go well, it makes a higher high, higher low, and I think in that case it would make a higher high like that. Okay, and now we have an uptrend where you have higher high, higher low, higher high, higher low, higher high, and you're golden. And that's your change of trend according to Wayne McDonell, specifically for the Aussie dollar. Yeah, Mark wants me to keep going. Yeah, we're going to have a 9-hour webinar today. This is going to be great. So I would follow this up with some homework. If I were me, so this is up to you, you should actually do the work now. Get the RBA meeting minutes, get the RBA policy statement. Both came out recently. Print them out and actually highlight, as a matter of fact, what the RBA is going to do. If you can't prove it with facts to an investor, then you're a joke, because nobody's going to give you any money. Think about it that way. You need to go in front of, let's say, an institutional investor, right? What do you think? University endowment, insurance company, multi-millionaire. Okay. And you're going to convince them to give you millions of dollars to trade Forex with. And you're going to say, well, I just kind of go with my gut. What do you think they say? Get the hell out, yeah. So they're going to say, and a lot of these investors, guys, they have a very long-term outlook because they already have a balanced portfolio. You're some alternative investment to them, right? They don't even need you, really. They're interested because you're liquid and you have low correlations and stuff like that, which are very intriguing these days. But they don't need you. So just talking to you is risky emotionally and maybe even financially, right? Yeah, that's funny. That's actually funny. I just kind of go by the seat of my pants. Well, you're unlucky today, buddy. Get the hell out. Well played, so. So anyways, they have very long-term outlooks, right? Years and maybe even a decade, right? Right. They're not talking about oil this week. They're talking about oil in the next year or two or three. All right. So you need to say, well, I've been reading the RBA, the Reserve Bank of Australia's meeting minutes, as well as their policy statement and their sort of public discussions with the media. And here's how I see the next 6 and 18 months out of the RBA. And you lay it out for them with fact. So Governor Stevens said on April 18th, 2015, blah, 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 blah. Then followed up in the June meeting, it was discussed, blah, 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 blah. Then their most recent policy statement, where they did not lower interest rates, it was stated here in paragraph 7. Let me highlight this for you. Blah, 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 blah. Therefore, this is my opinion for the RBA. Now, let's take that further and talk about global macroeconomics. When will the Australian economy improve, and when should they move from an expansionary monetary policy to a contractionary, at least normalization? And that's really going to come down to multiple things. One, quantitative easing out of the Eurozone will take approximately 12 to 18 months before we start to see serious levels of green shoots. Then that will be translated into an increased industrial production capacity utilization out of China, which will then increase demand for commodities. So you'll see Baltic Dry Index rally up above 2,000 and a CRB stabilization. Translated into higher prices for iron ore and coal and gold and other commodities that Australia sells to China. And therefore, you would see an improvement in jobs in Australia, wages in Australia, consumer spending in Australia, inflation in Australia, and a raising of interest rates by the RBA. The total course for this will be blah, 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 blah. Give me your damn money. I'm the greatest trader in the world, right? And then that's it. And you walk away. Boom, I need suitcases for all this money. Ugh. Here, help me with this, sir. Or you just kind of wing it. You know, I'm pretty good with the 5-8 cross on the 5-minute chart. I'm wicked at the ADX, bro. So that would be, if I were me, I would do that process. Honestly, what we just talked about, you know, the change of trend, I could have given you a 10-second answer to that. But I think if we grab hold of this, because you can sense that this might be setting up. I like that. Okay? I like that you're sensing that. There is risk associated with that. So, for example, I could take it another step further and say, well, that's why we hedge the cash position with binary options. And, oh, snap, what? You use derivatives to lower the risk by 40% on your cash positions? Holy crap, now that actually sounds intelligent. Okay? So, anyways, do the homework. Read the RBA meeting minutes, right? Read the statement, maybe Google for a couple hours and what the RBA members have been saying publicly at various conferences. And actually do a PowerPoint presentation, convince somebody that they need to buy the Australian dollar even though it's been falling for 3 years. If you can do that, you're on your way to greatness, don't you think? I mean, do you honestly believe that this is going to hold you back as a currency trader? Like, Wayne, if I did that, I would suck as a trader. To think about it and to do some research and put it down on paper and to be able to talk about it intelligently, that just sounds dumb. No, I'm not going to, Vishal, I'm not going to repeat that. That's mine. You can't take my stuff and go out and pitch it to other people. You would owe me money. That's my alpha. I could be completely wrong. But I did my work, and I can talk about it. Now, I might be wrong. See, that's the interesting thing. I could be completely wrong. I don't know if I'm right, but I know I've done the work. And I talk to investors. They're lining up tens of millions of dollars, maybe more, because of it. But you have to say, well, nobody really knows what's going to happen, but here's what we've looked at, and here's what we believe it means. And if certain variables take effect in the way that we think might happen, then the likely result of that would be this, this, and this. But, you know, every step of the way, you could be wrong. And you only have to be wrong in one of those pieces, right? Mark says, it doesn't matter, then you have your money. Yeah, and then they give you money, and then you just trade the 5A cross all day, right? You're like, yeah. RBA statement, 5A cross, buy. 5A cross, sell. RBA, blah, 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 blah. Well, if you look at the inverse reverse divergence indicator, the inverse reverse divergence strategy, yeah, hoo-ha. So So that's one thing. And then, like I said, you can take it further. Let's say this is the Australian dollar versus US dollar. Now, see, I might long the Aussie yen and not the Aussie dollar, but that's me. Fine. But let's take this one step further. If it's been down for 3 years, and right now, let's say we're only looking at an hourly chart, even if it reverses on the hourly, do you think it's guaranteed that it's going to reverse on the daily? No. I mean, you better jam your stop. I would say within 24 hours, right? Let's say you're up 100 pips, you better jam the stop, right? And then pray. But how could you reduce your risk? Actually, how can you reduce the risk that your clients are taking, that you're taking on behalf of your clients? How can you reduce risk even further? That's where you take the binary option. Right? So I said in the beginning, the Trader's Way offers you Forex, energies, metals, indices, and binary options to scalp and to hedge. Okay? Let me bring that up for you. So imagine you're long right in that triangle. Okay? And your stop is where this orange line is, down here. That's your stop. Okay? I guess we'll even lower it a little more. Okay, there's your stop. All right, so you have limited downside and unlimited upside. Is that correct? Okay. What other reason would you like to be long on this? You're going to collect 2% interest. Now, here's the problem with this trade. The Fed's going to raise interest rates, and the interest rate differential is going to diminish. So again, I think the Aussie dollar is the wrong trade to be on. I think Aussie Swiss franc, I think Aussie yen are better off. But that's your alpha. That's your bag, baby. But let's just talk about it like, let's say the United States doesn't raise interest rates. Let's just play that. We're neutral on the U.S. dollar, okay? Fine. So all else being equal, you're going to collect 2% interest on the Aussie dollar. What's your leverage? Is it 100 to 1? Well, in that case, earn 200% interest a year on the cash that you have actually risked. Did you ever think of it that way? That if you can hold this trade for exactly 1 year, you will earn 200% interest. What? Did anyone just have a heart attack? Did anyone just fall out of their chair and hit your head on your desk on the way down to the floor? 200%. Yeah, for a year. 200%. Because you're leveraged. You've ponied up $1,000, but you're trading $100,000. And you're earning interest on the $100,000, but you only put in $1,000. Yeah, it's only a couple 100%. What's Yeah, all right. You got a better deal than that? Sure you do, eh? All right, cool. So I'm just saying you might want to be long as possible. I mean, the pips are good. Yeah, and the money is deposited in your trading account, mark to market in real time. So you can actually trade that money. Cool. So anyways, You're long here and you have unlimited upside in pips, but you're actually being paid an income on top of that. And a 200% annual income is pretty good. Pretty good. All right? You might be new to finance, but that's pretty good. While 5% is pretty good, 200% is better than pretty good. So anyways, you kind of want to be long, but you do want to reduce your risk, right? Because you're a professional, right? So what you do now is you take a binary option on the Aussie dollar. And if you're wrong on this, let's say this is an hourly trade. If you're wrong, how long will it take to make that lower low? What's your guess? How much time do you think it'll need to pass before it makes the lower low? Yeah, Andy's so good it takes him 3 days to be wrong. Yeah. Cool. Igor says 24 hours. All right, fine, whatever. I mean, it's a subjective question, right? All right, good. So what you do then, how much do you have risked? You pop down $1,000, right? Potential payout, too much. Okay. Now let's do 555. All right, there's your $1,000 on the Aussie dollar. And at the end of the day, you could do it that way, or you can actually change this and make it the next day. Let's do it that way. I got to redo it if I do that way. All right. Aussie dollar 555. It's a little, yeah, because it's a different binary. So let's do 600. Okay. And today is the 11th. So that's the end of today. This is Monday. The end of Monday. Is that fair? End of Monday? I'm going to do it again. Okay. So now you could long here and then short the binary option with a put. And at the close of trading on Monday, right? If price is lower than here, right, there'll be a $1,000 payout. I forgot to include my so we got to do the 1,000. All right, there we go. Okay, you see that? Is that next Friday, the 19th? Did I do it too far out? Yeah, I guess you're right. Wow, we're making this too complicated. Oops. But I think you get the gist of it, right? All right, so here it goes. When the binary expires, if it's lower than here, you will earn 76% return on investment on your $1,000. Okay? So if price falls, you make $760. Okay? And if you're right, you make money this way. If you're wrong, you make money this way. And they basically offset each other. So you're not really going to make any profit on the first, let's say, 100 pips, but you plan on being in this for a year. You see what I mean? So now you're hedged, but the thing is, there's only limited downside, and you have unlimited upside. That's the key, isn't it? And are you paying interest on your short position when on your derivative? No. You're earning interest on the cash, and this is just a derivative of the cash going in the opposite direction. So you've reduced your risk, okay? And if you think that's too much, then you could do it like this, guys. Okay, you're long with 1,000 of your real money, okay? And you just put 500 down as an insurance policy, and you've reduced your risk by about 40%. It's not 100%. You'll lose money on the cash, right? You'll lose in pips, but you'll get paid $380 profit, but you lost 1,000. So you've cut your risk by 38%. You see what I mean? That's not so bad, isn't it? If you use cash, then you're also paying interest going the other way. And you also have unlimited downside. And also, when it comes to a binary, what happens to your position if price goes against your binary by 250 pips? Let's say your binary is for a week. What happens if you're short the Aussie dollar, but this thing goes up to 73? You're going to lose a lot of pips, right? And I don't think you wanted to be losing $2,500 on a hedge, right? I mean, it kind of defeats the point, right? You guys with me? Sometimes the webinar thing just freezes up. Are you still with me? Yeah. So you don't want to hedge with cash. So what do you do to protect yourself in a cash position from losing too much on your hedge? Well, now you're going to put a stop loss. Okay, you see where I'm going with this? So now, to equal the binary, so in this case I put $500 down, right, for an 880 payout. That means your hedge, your stop needs to be 50 pips away. What's the likelihood over the course of a week that your hedge gets knocked out for a loss, even though it's a good hedge? Is 50 pips too close? You see the problem? It is too close. Well, Igor says to stop on a hedge. Well, that's the question mark, right? Do you want to risk 2,000 pips to protect yourself from a $1,000 loss? I mean, at some point, you don't know if you're really, truly long or short, right? Because you're not making money on interest. There's no interest rate differential. You're paying interest on one, making interest on the other. They offset each other. And you're making money on one, but losing money on the other. I mean, it's just not a good hedge to hedge cash with cash. That's why they invented options, guys. It's the whole reason the whole thing was invented. Where's my mouse? So what you want to do is be long the cash and short the derivative. So you long the cash here, short the derivative, because the thing could go up 500 pips against you. You're still not going to lose any money. But what if it goes up 200 pips against you and then comes down? Well, it doesn't matter. You don't need a stop loss on an option. It's all built in. Lawrence says it works like insurance. It is insurance. If your long-term cash position earning yield, 200% annual return on cash in, just on the yield alone, imagine all the pips you're going to make if you're actually right. that this thing goes to 85 from 70. You make 1,500 pips, right? Right? You make $15,000 plus $2,000 in interest. So your return after 1 year is $17,000 on a $1,000 investment. Maybe you want to insure that sucker. Maybe $500 will do it to reduce your risk by 40%. So you long here, you short here, and it doesn't matter how wrong your hedge is, you're not going to lose more money. But if it comes down into this area, you'll get paid when, right, at maturity, at expiration. So now you're long-term long in the direction of your fundamental bias after a reversal pattern, after a higher high, at a fib level, so that you can earn 200% return on cash invested, plus unlimited upside opportunity on the pips, and you reduced your risk by at least 38% by insuring that position with a binary option through the derivatives market. That's all. So, hey, thank you for attending today's event and all the events I do every Friday here at FX Street. Thank you to the moderator. Thank you to all the leaders of FX Street. They're tall, good-looking, kind-hearted, mature, interesting, intelligent, athletic people. Remember, open up an account at Trader's Way, especially if you want that tool, if you want to actually see orders in the interbank system. I can hook you up. Just open a live account at Trader's Way. Let me know. I'll show you how to do that. It's just a script hooked up into our servers. There it is for the Aussie. And if you are finding success from our webinars together, will you please email FX Street? Let them know that our time together is worthy and valuable, and that, I don't know, maybe I should do this again next year. Yeah. Would you do that? Pretty please? I'd like to know that it matters. If it doesn't matter, I'd rather do something else with my time. Yeah, cool.